Hey guys, Taylor with GammaEdge here, coming at you with a post-market recap for May 1st, 2025. Fairly choppy day today, but as far as what we can see, the bullish picture is still intact. Let's get into that now. I'm going to go quickly through our pre-market prep. You can go back on our YouTube channel, watch today's pre-market prep to see exactly what we do. But just broad strokes, looking at our market trend model, we were positively bullish in the short and in the intermediate term coming into the session today. What that means is that the short-term momentum and the medium-term momentum were both trending higher. The long-term momentum was shifting higher as well. You'll notice most days we've seen net large buying on the session. That's measured through our filtered tick. And then again, looking at the SPX options complex, understanding how speculators are positioned out in the future. Because again, options are inherently forward-looking, right? We can see SPXA, this complex was call dominated. SPXP as well was mostly call dominated. So net kind of from a swing trading time frame, going off the market trend model and our analysis of SPX, all of those were fairly bullish and call dominated structures. So then looking at SPX 0DT for intraday trading purposes, we knew that we were opening around 60 or 56.30, 56.35. And key transition zone level was 56.10. Again, this is the top of our drunken sailor range. And right, the thing to note here is as we progress higher in the structure and get further away from transition, the air is getting thinner and thinner. So what that means is that we need more and more call speculators to step in and help supply fuel to propel price higher. That gets us into SPX price action today. Here we have a 5-minute chart. Key things to note is 56.10. That's the top of the transition zone I just hit on. I have that annotated for you. We also have the opening print here in the blue line, something I personally like to follow, not necessarily a GammaEdge thing. And then the white line is VWAP. So again, today we saw a ton of interaction with 56.10. It's a fairly choppy day. We'll get into the intraday volume signature just to better understand that. But again, as we were saying, because we're opening above 56.10, quite a ways away from the transition zone, the air was thin, right? We needed to see kind of a large buying impulses higher, which we did not ever see in the options market, hence the choppy day that we did get. Getting to that, here's our intraday volume analysis of SPX 0DT. What we do is on a 5-minute basis, call side, put side, we aggregate the volume, find the midpoint of that volume of the distribution. It's called a centroid, and we plot that. So we plot those every 5 minutes throughout the session. As you see here, we connect those dots for you to form these solid green and red lines. Then right, that effectively just kind of measures for us and visualizes for us the sentiment of traders, both calls and puts in the 0DT throughout the intraday trading session. And so if we can understand how folks have been trading from the open to any point in time throughout the day, say, between the open to, 1 o'clock, we can understand A, the character of price action, and B, we can understand what the behavior of those centroids have been. We can understand what they are going to be through the close, all things equal. And right, price follows where transactions go. So our future guardrails of the centroids is kind of a great guide for understanding what price action is likely to do throughout the rest of the session, all things equal. And so today, before we go look at kind of an intraday actionable example, we can just see that the call centroid side was fairly flat to lower on the day, and the put centroid side was higher on the day. So again, this is just kind of classic choppy price action signature there. So the reason that this is helpful is important is because say, it's 1 o'clock, you understand that, the call side is flat, put side is moving higher. So what that tells us is, hey, there's not a big risk to a massive downside move, all things equal. And to the upside, there's really not a risk of an upside move because we're just not seeing the material speculation to push price higher either. So those are range-bound conditions. So if you're an intraday scalper, right, then you know that you need to kind of tighten up what your expectations on a trade may be. If you're expecting 30, 50 point ripper, well, this isn't, a month ago. These are your current conditions where you may only be getting 5 or 10 point move before you get another retracement. And same thing, if you're an options trader, an options seller, understanding kind of above the centroids, below the centroids, or just kind of understanding that prices in a consolidated nature is super helpful as well. Right, and here's what the volume chart looks like at 1 o'clock. Again, we have the call centroids here. Let me annotate that. We have the put centroids here, call centroids here. Again, the behavior of the call side has been fairly flat to lower throughout the session. So hence our lines of best fit right here is projecting out where the centroid is likely to go throughout the rest of the session. We see that was fairly flat. Same thing with the put side. Puts were sideways to higher on the session. So again, using our lines of best fit, which tell us, this is the behavior so far. So we would expect this to continue, all things equal. And again, projecting price to go where it's indicated with that line of best fit. So again, 1 o'clock, understanding what's happening, character price action has been choppy and is expected to continue to be choppy. And that's where we get the confluence of our market trend model as well too, because intraday we just did not see really any large impulses in buying. Notice, Tuesday and Wednesday this week we've had nice linear updates with supported large buying. Today we just did not have that. It was fairly, it was certainly higher, but it's more sideways to higher rather than that nice kind of 45-degree angle that we've been seeing the rest of the week. And buying was very modest at the beginning of the session, and then really tapered off as we got that choppy consolidating price action. So, with that said, hopefully it's clear understanding, using those intraday tools to help inform our intraday trading. Obviously, in terms of the bigger picture, go back and look at our pre-market video where we get kind of more in the weeds of understanding the full SPX complex, market trend model, all that good stuff. But going forward, market trend model is continuing to stay constructive. So we don't want to be fighting that. And then the SPX structures are also improving as well. Those are becoming more call dominated. So that is constructive to see as well. So from there, with that understanding, now it just comes down to understanding where those key levels are in the market, and then understanding those key stocks leading the move higher. So if you're a swing trader, we have scans looking for call dominated stocks, put dominated stocks, ones that you want to avoid in this environment. And then we just kind of put together what our intraday tools look like as well for SPX, DT, futures traders, all that good stuff. So with that, I know it's late right now, but you guys have a good night, and we'll see you guys tomorrow. Thanks. Bye.